Good morning, this is Dhesi Market Memo. The macro question for the week is whether last week's rotation stabilizes or whether it turns into a rates and supply story. Three themes, then the watch points. Theme 1. Equities are not moving in a single block. Dispersion is the story. On the 5-day lens, Europe is holding up better than the US and Japan is still the standout. The Nikkei is the clearest outlier in the 2-week view, and that is consistent with a market that is rotating inside risk rather than repricing all the risk at once. So for the week ahead, that matters because dispersion changes how hedges behave when you get winners and losers inside the index, and it is harder to rely on broader assumptions. It is also why your discount rate and funding baseline becomes the real anchor. Theme 2. FX is quiet on the surface, but the funding signals still matter. Dollar yen is the cleanest barometer for how rates and risk are interacting. The level is 153.1. Euro dollar is 1.186, cable is 1.36. The point is not the last decimal, the point is direction of travel and liquidity when you roll hedges. If you run yen liabilities or you hedge dollar revenues back into sterling or euro, this is a week to think about execution windows. Not because FX is breaking, because it is often calm before it is not. Theme 3. Commodities are split, so inflation risk is not gone. Brent is 6,735 and gold is just below 5,000. Over the last week, energy has softened more than metals, while the broader regime lens keeps gold supported. That feeds into the inflation conversation, not in a dramatic way, but in a way procurement teams and finance teams actually experience it. Metals and energy are carrying different risks. Now the glue. Rates remains a price of everything. US swaps are 3.5% in 2-year and 3.9% in 10-year. UK swaps are 3.7% in 2-year and 4.2% in 10. Euro is lower with swaps 2.2 in 2 and 2.8% in 10-year. That is your funding baseline. It drives fixed versus floating conversations, hedge carry and discount rate setting behind investment decisions and pension assumptions. If you are thinking about issuance or refi this quarter, do not think of this as generic rates are high story. Think of it as curve selection and timing. 2 years and 10 years tell you two different things. On the crypto front, Bitcoin is at 68,000. It has rebounded on the week lens, but the 2-week regime still shows damage in high beta. The implication is simple. It is a sentiment barometer, not a macro anchor at the moment. Practical points for anyone managing exposure. First, rates and funding. If you are setting budget rates, sanity check the curve point that you're using. Align it to your maturity profile. Second, FX hedging. If you have yen funding or large dollar exposures, review roll dates and liquidity. Also, do it in a calm window. Third, inflation and inputs. Treat gold strength alongside a softer oil picture as a reminder that inflation hedges are not one trade. Separate metals, energy and FX pass through into your assumptions. What to watch? The main crypto test is US GDP for Q4. In the UK, CPI and labour data matter for the rate path narrative, and in Japan, GDP and CPI are the key reads, with yen sensitivity still the channel into policy expectations. And underneath all of that, keep one structural lens in mind: supply and term premium. That's Dhesi Market Memo. If this saved you time, please do subscribe and comment on the one level you're watching today.